Yo, what's up you guys? Welcome back to another video. Now in today's video, I had to make this video basically because the US inflation has started to show signs of cooling down. Yes guys, the CPI data just got released and it came through lower than expected. Now if you're new to the channel, a sub would be appreciated as I provide valuable educational content on a daily basis. And if you enjoy the content, please smash that like button, guys. Let's try and get to 100 likes on this video because we are finally ready to buy the dip of the dip of the dip. Now, my good friends, let's jump straight into the data. Firstly, article from CNBC reads, Consumer Price Index rose 0.4% in October, which is less than expected as inflation starts to cool down. Now, a lot of this comes from, if you guys have noticed, a lot of companies had started to lay off people. And because of that, and interest rate hikes has been putting so much pressure on consumers. And now all of a sudden inflation started to slow down. But I'll explain to you how that works in a second. It says here the consumer price index basically rose less than expected in October, an indication that while inflation is still a threat to the US economy, pressure could be starting to cool. The consumer price index, a broad measure of goods and services costs, increased 0.4% month over month and 7.7% from a year ago, according to a Bureau of Labor Statistics released Thursday. Respective estimates from the Dow Jones were for an increase of 0.6% and 7.9%. Unfortunately, the Dow Jones was wrong. I'm not going to say once again. So basically what we have here, a 2.4% decline in used vehicle prices helped bring down inflation figures. Apparel prices fell 0.7%, must be Kanye West's deal with, or yeah, whatever his name is, as medical services were lowered to 0.6% there as well. What we have here is we got a 0.4%, which is basically in line with what it was previously, but it was basically lower than what the market had forecasted. The CPI also came through from a low 8.2%, now sitting at 7.7%, and then we got the core CPI, which is now sitting at 0.3%. Basically, how this works is the CPI is a tool used to measure inflation. Now, what this means is that when inflation is high, what has to happen is the Fed needs to hike the interest rates. And by hiking the interest rates, they increase the strength of the dollar index. And that basically attracts investors. They invest in the dollar index, the value of the dollar index goes up. Now, what happens if inflation cools down? Now, what happens if inflation cools down? Basically, what you see is you'll get something like what we saw here, or I think it was somewhere here back in 2020. When inflation cools down, basically what that means is it means it's not good for the dollar, because when inflation goes down, the Feds then lower the interest rate. Investors don't want to invest in here. And what that basically means is the price of the dollar index decrease lower. And that now means the stock market increases in value because the Fed's now less likely to hike interest rates. Instead, not less likely, but they are less likely to hike it at a little higher price. So what they do is they hike it just enough, but that means there's more savings in the consumers to now spend in companies such as the top tech companies in the stock market. And that's why you saw those the stock market rally quite heavily today there as well. Now, what I do want to do for you guys very quickly today is just basically give you an update on what's about to happen in the market, kind of what you can expect in terms of what's going to happen moving forward there as well. Now, we're going to start with the dollar index on the monthly time frame. Now, basically what we have on the monthly time frame is we have a market that came back. If you remember, I spoke about this level over here. The market broke below support, came back to test it as resistance, broke above resistance, and now we can definitely expect the market to come back and test it as support. The market had broken out of a very huge consolidation phase that it had been stuck in since 2017, finally broke out in this year, basically, when the Fed decided to hike interest rates. And we saw the massive spike in the market there as well. So if you drop down on the weekly time frame, what do we have? Now, from a weekly perspective, we firstly had the market print this information. Now, after the information, you expect to pull back to the neckline before that continuation. And this is exactly what we got here. The market was also faced with previous resistance, came back to test it as support, but due to the CPI data released today, the market basically fell right through that, support level over here. This level is allocated over there. Now, the best way to approach this is I do expect a slight correction before a continuation to the downside. Drop down on the daily time frame. What do we have? Now, from a daily perspective, if you do remember, this market had also been basically trading sideways for a good number of, oops, my bad, there we go. This market has been trading sideways also for, for a good amount of time, and then finally we had to break below that level. Definitely a pullback once again expected. However, I do not expect the pullback to take place right away. Not sure what had happened there, but basically what I do see is I do expect the dollar to continue lower, then pull back, and then continue lower. However, we are going to get a clear impulse. Also, if you take your Fibonacci from the high to the low, probably around that level, we'll get a 50% pullback um, on the dollar index there as well. But the time has finally come for the dollar index to give up that gains that it had accumulated over time. And I have to say, although the the US is not where they wanted to be, but I guess they still have an opportunity to where they could potentially be heading, and that is basically to get a good. But the only problem that we are faced with here is is people are losing their jobs throughout this process, which is not good there as well. Also, don't forget, if you are looking for signal services, looking to pass a funded account, please check out my website. I do also provide mentorship services as well as one-on-one services. I'll leave a link in the description below there as well. Next up, we've got GBP USD. Now, just looking at the price action already, GBP USD obviously had this massive bull run. Again, these are things that you cannot anticipate in the market. And you can see this move in the market over here was a full 2, 3, almost a 2.5%, right? The market's faced at the level of resistance. Now, it's very important that you keep in mind about, in terms of what I am going to tell you now. Okay. Now, here's a lot of retail traders, sellers in the market, but based off investor sentiment, well, not investor sentiment, based on how the price action works, there is a possibility that we could still, see GBP continue slightly higher, then pull back and continue lower. But let's start with the monthly time frame. Here on the monthly time frame, we can see now the market had broken below very strong level of support. Big possibility now for the market to come back and test it as resistance once again on the weekly time frame. What do we have now from a weekly time frame? I can see the market had completed this W formation at the neckline and is now ready to continue that move to the upside there once again. The market's also now faced with strong resistance that we obviously expect the market to break before that continuation to the upside on the daily time frame. What do we have now from a daily perspective? We are currently faced with resistance, but the market also printed this resistance over here. Now, I would say it's probably a given that we can expect the market to pull back slightly and then continue. Sorry, do apologize about that. I do expect the market to pull back slightly and then continue higher. Remember, alternatively, we could also see the market continue slightly higher and then pull back, continue higher. Because in doing so, will the market give us an overextended W formation, which is considered a bullish pattern from a technical perspective there as well. Next up, we have US oil. Now, oil is negatively correlated with the price of the dollar index. Now, the buyers on this will now shift from bearish to bullish. And once again, we are currently faced at a level of support that we do expect the price of oil now to retrace back up to. Next up, if we do look at the daily time frame, what do we have over here? Now, from a daily perspective, we have this massive impulse. So after an impulse, you expect a correction. Take a Fibonacci from the high to the low. We could see how the market had not pulled back to the 0.382 yet. So we do expect the market to pull back slightly. Because we're looking for buying opportunities, the market had broken below this level of support, came back to test it as resistance. Now, the best way to approach this is always to wait for clear break above that level of resistance. For that resistance to then turn into a level of support and then for the market to continue higher there. Once again, next up, we do have the Nasdaq 100. Now, the Nasdaq 100 came out of nowhere and just went boom. And which is quite funny though, because This is all based off, investors' sentiment, because investors now expect the interest rates to slightly cool down, and that's going to encourage investors to have some funds left to now start spending their money once again. Now, if you start here on the monthly time frame, what do we have? Firstly, we have a market that's still trading below this level of support, and it's now testing it as resistance. So basically, if we do expect the market to continue higher, we obviously want to see some, breaking a close above that level there as well. On the weekly time frame, what do we have? We can now see that yesterday, when we expected the market to pull back to that level, we expected the market to reject that level. But now that we do have that data, we do expect this continuation to the upside, as we can now see how the market had broken below above this level of support. It's now testing as a level of resistance there as well on the daily time frame. What do we have now? From a daily perspective, it's clear that this is a very important structural level over here. The market printed a massive impulse. After an impulse, you expect a correction. Take your Fibonacci from the low to the high. We do have a 0.382 pullback that's lining up perfectly with its previous level of resistance. That's now acting as a level of support. So you definitely expect the market to pull back to this level and then continue higher and see how far it can go. Next up, we do have the Dow Jones. Now, the Dow Jones is currently trading at a very strong level of resistance there. Just like the Nasdaq 100, apart from the Dow Jones is now definitely on its way to go and test the neckline of that previous level of support that is now acting as a level of resistance on the weekly time frame. What do we have now? From a weekly perspective, it's very clear that we are currently just trading still in bearish territory, but the market has broken above that strong level of support that is now acting as a level of resistance on the daily time frame. We are now faced with a level of resistance that's being tested, and the market also broken above this level of resistance that is now acting as a level of support. Now, the best way to approach this is obviously to wait for a clear daily close above this level. And on the retest, you can definitely start looking for some buying opportunities for the market to go and test that previous level of resistance of support that is now acting as a level of resistance, as we identified from a monthly perspective. Next up, we've got gold. Now, gold is finally on the move. People are starting to buy gold once again. Yeah, on the monthly time frame, we do have gold to come back. Give us that potential that we are looking for, which is allocated here at this level, which is the first 0.382. So we can definitely expect gold to continue higher, not just because of the CPI that came through lower, but because we expect gold is negatively correlated with the dollar index. So when the dollar index decreases in value, we expect the gold to increase in value. But we do expect the market to complete this W formation at the left leg there as well. Drop down on the daily time frame. What do we have now? From a daily perspective, it's very clear that this level acted as a level of resistance, and the market was stuck within this consolidation, just like the dollar index was, and the market finally broke above that level. All of this resistance is now acting as a level of support. Now, the best way to approach this is obviously to wait for the market to go and test this previous level of resistance here, wait for that pullback, and then definitely look for some buying opportunities on the retest once again there as well. Thank you for your time. That's all from my side. And as always, cheers for ears.